Nike stock investors got some unfortunate news from the company's management team when it reported quarterly results. The problem and the headwinds that Nike faces seem to be getting bigger as we're learning more about those headwinds. Nike's management team, I thought, did a great job of highlighting and explaining the headwinds, what they plan to do about it, and how long investors should expect to wait until the company's turnaround starts to take shape. So, I wanted to dig deeper in these details here, understand more about these developments and the unfortunate news for Nike stock investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So, one of the things that was a disappointment when I reviewed Nike's results was not only did their revenue decline by nearly double digits, but they had also spent more money on marketing. The company's demand creation expense grew high single digits compared to the same quarter last year. So they spent more money on marketing and their revenue fell. That's a significant downside result. Sometimes when a company's revenue grows by a lot, I also look at how much they spent on marketing. And if they spent a lot on marketing and their revenue also grew, I give them less credit because that revenue growth was supported by a big advertising push or a big marketing campaign. It wasn't a result of organic demand for its products because the market just needed its products. The solution it provides the marketplace was so highly regarded that it drove sales growth. That's the best kind of sales growth. Of course, that's the hardest kind of sales growth to achieve. But to see your sales decline by double digits and to see advertising expense increase, that demonstrates that the company is finding it more challenging to drive sales growth because even with an increase in advertising expense, it didn't drive sales growth. Now, I know some of this advertising may not be direct response advertising where you're doing things like offering a affiliate website and increase in the percentage you pay them to drive more traffic to your website, and that results in an increase in clicking activity, etc. Those types of campaigns that the purpose of the campaign is to drive more purchases. There's also the types of advertising that just aims to educate the public about your company or some event that you want to sponsor. That's not really driving sales growth. It's just increasing brand recognition, which should pay off in more longer term instead of in the immediate uh, aftermath of the advertising spending. Also, in the third quarter, they hosted dozens of key partners for product engagement and future growth planning, including a summit for partners serving core price points. They've taken initial step to expand distribution to support our expanded core product offering, which is a meaningful market opportunity for Nike. So beyond all of this jargon, to simplify this, I like Nike's reaching out to partners, wholesale partners, distributors, and trying to rebuild those relationships because the previous management team deprioritized partners. The previous management team wanted to go direct to consumers and cut out the middleman. And that was hurtful for a lot of these partners. Nike's going to need to rebuild that trust, and this is one step in that direction. I've talked extensively about this in my review of Nike's latest quarterly results. So, this is part of Nike responding to the headwinds, something they're doing to turn this around. It's not going to be immediate, right? This was just a meeting of partners, right? And so Nike will hope that this starts to rebuild the relationship and they continue on this path. And then maybe 3 or 6 months later, when these partners come back to order for the upcoming holiday season, maybe they get an increase in orders from partners because they've rebuilt the trust and rebuilt the relationship. So this is something to keep an eye out for. How successful are they in this regard? Or have partners just completely lost trust in Nike and have went to other brands instead? So they went on to talk about their results in China, which are more challenging than the rest of the world. They had challenges in all parts of the world. Revenue was down in all parts of the world, but their headwinds in China are especially strong here. And so the company said, while the macro environment is challenging, overall sport is growing in China and we must accelerate our pace. The market continues to be promotional, especially in consumer moments and in the digital channel, and we are taking aggressive steps to clean up the marketplace, with the priority being the health of their partners. These steps had a negative impact on our revenue and gross profit margin this quarter. So, this is one of the headwinds in the current quarter. Let me break this down a little more here, step by step. When a company says the market continues to be promotional, what that means is their competitors are offering a lot of incentives and promotions to capture market share. In other words, it's an increase in competitive pressure, which is bad news for investors because it leads to what the company said at the end of this statement, negative impact on revenues and margins for a business. It's good for customers because they get lower prices as all of these companies are fighting with each other, lowering prices, offering more deals. And so the company saying that these competitive pressures were even more magnified in key consumer moments. So imagine, like in the United States, we have Black Friday. In China, they have those types of shopping moments. And in those moments where activity is elevated, the promotional activity was also elevated. So Nike was taking aggressive steps to clean up the marketplace. What that means is they were lowering their prices for older and less attractive inventory more aggressively so that they can get that inventory off the shelves of their partners, and so they can resupply their partners with more fresh and more updated inventory that they think that consumers will like more so than what's available right now in the marketplace. But they want to get rid of what's in the marketplace to begin with so that they can replace those items with fresher inventory. And so they offer discounts and deals to get rid of those items. And of course, if you offer discounts, your average selling price decreases. So that's a decline in revenue. And it's also a decline in your gross profit margin because when you're offering a discount on an item, it's not like the cost of goods sold of that item decreases. That item is already there. There was already a cost of goods sold associated with that item. And so when you lower the price, the cost stays the same and your margin declines as a result. So these are some of the headwinds Nike is facing, and investors looking at Nike trying to see if it's a buy on the dip here. These are some of the things you need to know. The challenge is not something that's going to be fixed in one quarter. This is a longer term issue. It's going to take at least a couple of quarters for Nike to address these issues. Now, the stock price might recover sooner than that. That remains to be seen. But in terms of the actual performance, it's going to take longer to recover. Hey everyone, I'm excited to announce a brand new private Discord for our channel members at the VIP Discord level. It's a great place to connect with me directly, engage with like-minded investors, and learn more and take your investing to the next level. Spots are limited, so join now before it's too late.